In a world where money is no longer just paper, where smartphones have become digital wallets, and where a single click can move millions, e-money has turned into a global skill. But not everyone wins. Only the people who follow the right methods, the right discipline, and the right habits actually succeed. Today, here are the most powerful tips every e-money user must know. Before you earn, invest, or transfer, you must understand the platform you are using. Whether it's PayPal, Skrill, Binance, Cash App, Uphold, Wise, or any other wallet, study their fees, limits, security, and rules. Most people lose money simply because they don't read the details. A successful e-money user learns before jumping in. E-money is fast, easy, but also risky if you're careless. So always use two-factor authentication, strong passwords, device lock plus fingerprint, email alerts, and trusted networks only. One weak password can lose everything. Your security is your first investment. A smart e-money user never puts 100% of funds in one place. If one account gets locked, hacked, or restricted, you lose access. Split your money: primary wallet, backup wallet, savings wallet, trading or business wallet. This is called digital diversification, and it protects you. If you want long-term success, treat e-money like a business. Always track what comes in, what goes out, fees you pay, and monthly spending. Because untracked money disappears, successful users always know the numbers. The digital world is full of traps, fake websites, unverified apps, random double-your-money schemes, people sending proof screenshots. Never trust them. If something looks too good to be true, it is. Your safest rule: only deal with official platforms and trusted people. The digital finance world evolves every month. New updates, new features, new restrictions, new opportunities. So keep learning. Watch tutorials, follow news, study new apps, upgrade your skills. People who stop learning stop earning, but people who learn continuously grow continuously. E-money success is not luck, it's discipline. Discipline to save. Discipline to spend wisely. Discipline to avoid unnecessary transfers. Discipline to protect passwords. And discipline to plan for the future. This is the difference between people who use e-money and people who master e-money. E-money is powerful. It connects countries, creates opportunities, and opens doors for anyone, no matter where they live. If you follow these tips, you don't just use e-money, you use it smartly. And in the digital world, the smartest win. In today's world, money is no longer just paper, coins, or plastic cards. A silent revolution is happening all around us. One tap, one scan, one click at a time. This is the rise of e-money. But what exactly is it? How does it work? And why is every country on Earth moving toward a cashless future? Let's break it all down. E-money, short for electronic money, is simply digital value stored electronically. It can be on your phone, your online wallet, or even in a prepaid card. Unlike physical cash, e-money exists only in digital form. When you open your mobile wallet, top up your balance, and make a payment, you're not using paper. You're using pure digital funds, verified instantly through technology. Examples include mobile wallets, online banking apps, prepaid digital cards, payment apps like PayPal, Cash App, or regional e-wallets. E-money moves at the speed of the internet and never sleeps. When you load money into an e-wallet, your cash is stored safely by the provider while you receive the digital equivalent inside your app. Each transaction is recorded electronically. No physical transfer, no counting, no waiting. You simply scan a QR code, tap your phone, send money to a username or number. In seconds, the value moves from one digital wallet to another. Every transaction is encrypted, verified, and tracked for security. E-money is exploding worldwide for three main reasons. 1. Speed payments happen instantly, anytime, anywhere. Convenience, no need to carry cash, no need to visit a bank. Your phone becomes your wallet. 3. Security, digital transactions leave a record, making fraud harder. Most apps offer OTP, biometrics, and instant alerts. Lose your phone? You can still recover your wallet through your account. E-money is safer than carrying cash in your pocket. Countries around the world are pushing digital payments like never before. Governments, banks, and businesses want faster, cleaner, more transparent systems. From Asia's mobile wallet boom to Europe's rise in digital banking to Africa's mobile money revolution, e-money is transforming economies at lightning speed. Cash is slowly becoming the old world. Digital is becoming the new normal. The future of money is simple: digital, fast, borderless, and secure. We're moving toward cashless cities, instant international transfers, digital identity payments, AI-powered fraud detection, and even government-issued digital currencies. E-money isn't just a trend. It's the foundation of tomorrow's financial system. And the question is no longer, will the world go cashless? It's how soon. If you found this breakdown helpful, make sure to like, share, and subscribe for more tech, finance, and future-focused content. Your next payment might be digital, but your knowledge starts here. Before lightning-fast mobile wallets, QR scans, and instant transfers, there was a time when digital money was just a new idea. Let's go back to 2012, a year when smartphones were still growing, Wi-Fi was slow, and the world was taking some of its first steps toward e-money. This is the story of how the digital financial revolution quietly began. In 2012, most people still trusted cash. Physical notes, coins, ATM cards. Online payments were possible, but they felt strange, slow, and sometimes unreliable. Only a few companies offered digital payment systems, and even those were mostly used by tech-savvy users, not the mainstream public. E-money in 2012 looked nothing like today. Prepaid internet cards. People bought prepaid cards to load money for online games and services. It wasn't smooth, but it worked. Online banking, the early version. Internet banking was still simple. Transfer limits, long loading pages, and security that felt outdated. Yet, this was the foundation of digital finance. PayPal dominance. PayPal was the king of digital payments in the West. But even PayPal required email logins, confirmation codes, and manual steps. Nothing was instant SMS-based payments. Some countries used SMS to send money. Type a code, send a message, wait for confirmation. It was slow, but for its time, amazing. In 2012, smartphone usage was exploding. Android and iPhone were getting popular. This opened a new door: mobile money apps. But these apps were basic. No QR codes, no NFC, no one-tap payments. People typed phone numbers manually. Data was expensive. Connections failed often. But still, mobile money was becoming a trend, and the world didn't even know how big it would become. E-money in 2012 had many challenges. Slow internet meant failed transactions. Many people didn't trust digital money. Security concerns were high. Phones had low storage and weak processors. Banks were not fully ready for digital transformation. Most people said digital payments? Not safe, cash is better. If only they knew what was coming. Despite the doubts, 2012 was a turning point. Tech companies were experimenting, banks were modernizing, and millions of new smartphone users were online for the first time. This was the year digital money stopped being a future idea and slowly became a global movement. Apps improved, security got better. Governments started supporting online payments. And from this slow beginning, a digital explosion was about to happen. Today, e-money is instant, smart, secure, and everywhere. But none of this would exist without the simple, early, imperfect systems of 2012. Every QR code you scan, every tap payment you make, every instant transfer you send is built on the first digital steps taken more than a decade ago. 2012 wasn't the peak of e-money. It was the spark. 15 years. That's all it took for money to transform from paper in your hand to pixels on a screen. Today we compare two worlds: 2010, when digital payments were a dream, and 2025, where money moves faster than thought. This is the story of how everything changed. In 2010, the world still trusted cash. Wallets were thick, ATM lines were long, and online payments were rare and risky. Smartphones were young. Most people used keypad phones. Internet was slow, expensive, and unstable. Digital money existed, but only in a basic form. Online banking with slow websites, PayPal for a few online buyers, SMS-based mobile payments, prepaid cards for online games. People were afraid of scams and believed cash is king. They had no idea a revolution was coming. Fast forward to 2025. Money is no longer physical. It's instant, smart, and everywhere. One tap, one scan, one voice command. Payments complete in seconds. 2025. E-money looks like magic. AI-powered payment assistance, QR codes for everything. Food, travel, shopping, cross-border payments in seconds, Face ID plus fingerprint security, digital wallets replacing banks, crypto integration in daily payments. In 2025, your phone is your bank. Your ID, wallet, and financial history live inside one tiny device. Money has become digital DNA. So what changed? Everything. Smartphones became powerful from keypad phones in 2010 to supercomputers in your pocket by 2025. 2. Internet became lightning-fast 3G in 2010 to 5G and fiber-speed Wi-Fi in 2025. 3. Trust shifted. People stopped fearing digital money and started trusting it more than cash. 4. Governments supported digital finance. Cash became expensive to print. Digital payments became smarter, safer. 5. Businesses adapted from street food stalls to mega companies. Everyone began accepting digital payments. The world flipped in 15 years. Speed 2010, minutes or hours. 2025, instant security. 2010, passwords only. 2025, biometrics plus AI fraud detection. Convenience 2010, carry cash, cards, coins. 2025, carry only your phone. Accessibility. 2010, banks needed. 2025, unbanked people use wallets. Global payments 2010, expensive, slow. 2025, seamless and cheap. Technology 2010, websites 2025, apps, AI, blockchain, QR, NFC. Humanity moved from manual money to intelligent money. In 2025, money has no borders. People pay, earn, invest, and save without touching a single note. E-money is not the future anymore. It is the present. What started as a small digital idea has now become the heartbeat of the global economy. From 2010 to 2025, from slow transactions to instant magic, from fear to full trust, e-money changed the world forever. And the revolution? It's only the beginning. Money is changing faster than ever. Cash is fading, and e-money has taken over our daily life. But is it all good, or are there hidden risks? Today we break down the benefits and drawbacks of e-money. Superfast transactions. E-money lets you send and receive payments in seconds. No queues, no delays, no weekend waiting. Just tap and done. Convenience. You don't need cash, coins, or cards. Your phone becomes your entire wallet. Perfect for travel, shopping, business, even emergencies. High security. Biometrics, Face ID, OTP, encrypted systems. E-money is safer than carrying cash that can be stolen or lost. Easy record keeping. Every payment is automatically recorded. Perfect for budgeting, business tracking, and tax purposes. Global access. From anywhere in the world, you can pay, save, transfer, and receive money. People without bank accounts can finally access financial services. Cost-effective. Most e-money transfers have low or zero fees, unlike banks, boosts businesses. Small shops, online stores, freelancers, everyone can accept payments instantly and grow faster. Requires internet and devices. No phone, no payment. Slow internet, the failed transaction. In rural areas, this is a big problem. Cybersecurity risks. Hackers, phishing, scams. If you are careless with codes or passwords, you can lose your money instantly. Technical issues, app errors, server down, battery dead, your payment stops. Privacy concerns. Every transaction is tracked. Companies and governments can monitor your spending habits. Overspending. Because payments happen too easily, people sometimes spend more money without realizing it. Not accepted everywhere. Some small shops, buses, old businesses still prefer cash. E-money is fast, smart, and powerful, but it also comes with risks. Use it wisely, protect your accounts, and always keep a balance between digital payments and cash. Because in the end, the future of money is in your hands. In just a few years, money changed its shape. From paper to plastic to pixels. Today, e-money is everywhere. But who exactly uses it? Who are the people behind this global digital revolution? Let's find out. Our first group is the busy workers, office employees, freelancers, graphic designers, marketers, and entrepreneurs. These are people who value time more than anything. They don't want ATM lines, bank slips, or waiting until Monday to transfer money. One tap, one scan, and their entire financial life moves instantly. They use e-money because speed equals productivity. For them, convenience isn't luxury, it's survival. Next, we have the online shoppers. People who buy clothes, food, gadgets, tools, tickets, everything from their phone. This group includes teenagers buying game items, families ordering groceries, and young adults shopping from Amazon, AliExpress, or local stores. For them, e-money is the doorway to the modern marketplace. No cash counting, no change, no waiting, just click, pay, delivered. Without e-money, online shopping simply cannot exist. Then come the small business heroes. Street food sellers, delivery riders, salon owners, tutors, online sellers, digital creators, anyone who needs to get paid quickly and safely. They use e-money because cash runs out. Clients don't always carry money. They want instant confirmation. They want to track income easily. E-money helps small businesses grow faster. One day's sales are recorded instantly, and money becomes easier to manage. These are the people lifting the economy, one QR code at a time. Our fourth group is the travelers. Tourists, students, backpackers, digital nomads, migrant workers. They carry one universal tool, digital money. With e-money, they can pay for transport, hotels, food, shopping, without worrying about currency exchange or carrying cash. For them, e-money is safety. Lose your wallet? You lose everything. Lose your phone? You can still recover your money. It's security without borders. Then there's the group leading the digital world, the young generation. Teenagers, students, gamers, content creators, social media users. They were born into a world of smartphones, apps, QR codes, in-game currency, online recharge, e-commerce, and instant notifications. For them, cash feels old-fashioned. Digital feels normal. E-money is their everyday language. Fast, smooth, unlimited. They don't just use it, they live in it. And finally, the people connected to the global economy, remote workers, freelancers earning international payments, business owners importing goods, and families receiving money from abroad. For them, e-money is freedom. They can receive money from any country, withdraw it, save it, or spend it, all without visiting a bank. E-money turned the world into one connected marketplace. So, who uses e-money? Everyone. From the busy professional to the student, from the street seller to the tech creator, from the traveler to the global worker. E-money is no longer the future, it's the present. A tool for people who choose speed, security, and simplicity. And as the world keeps changing, one thing is certain. Those who adapt move ahead. E-money isn't just a trend anymore. It's the future of global payments. But some countries are already years ahead. Today, we explore the nations where e-money is not only popular, it's a way of life. China is the world leader. More than 80% of people use e-money daily. WeChat Pay and Alipay have replaced cash almost everywhere. Street food stalls, taxis, hospitals, even small villages. QR codes run the entire economy. China is the definition of a cashless civilization. South Korea is one of the fastest digital economies in the world. Contactless cards, mobile wallets, NFC, everything is extremely advanced. More than 90% of payments are digital. In Korea, carrying cash feels old school. Sweden is on a mission to become the world's first completely cashless country. Only a small percentage of Swedes still use paper money. Bank cards, Swish app, and digital wallets dominate everyday life. Even churches accept donations digitally. Singapore uses e-money everywhere. Transport, shopping, government services, parking, health, food. The country promotes digital payments heavily, making Singapore a global smart money hub. Japan used to depend on cash, but now digital money is growing rapidly. Suica, Pasmo, PayPay, Line Pay, millions of people use electronic money cards and mobile wallets daily. Even vending machines accept e-money. India experienced one of the fastest e-money transformations in history. UPI, Paytm, Google Pay, PhonePe, millions use them every single day. Street shops, markets, taxis, and food stalls, everyone accepts digital payments. India is now a global digital payment giant. The USA uses e-money through credit cards, Apple Pay, Google Pay, PayPal, Venmo, Cash App. Online shopping and contactless payments dominate. Businesses and banks push digital heavily, making e-money a standard part of daily life. From China's QR empire, to Sweden's cashless future, to India's digital explosion, e-money is shaping nations in different ways, faster, smarter, and safer. One thing is clear. The world is moving toward a future where money doesn't live in your pocket. It lives in your phone. E-money is taking over the world, but not every country moved into the digital age at the same speed. While some nations are almost cashless, others still rely heavily on physical money. Today, we explore the places where e-money usage remains low and the surprising reasons behind it. Our journey begins in Afghanistan, a nation where technology grows slowly. Many areas still lack strong internet smartphone access, modern banking systems. Most people trust cash more than digital methods. Political instability and limited tech education make e-money a rare tool. Here, money is still physical: paper, coins, and hand-to-hand exchange. Next, we move to Somalia. Even though mobile money exists, e-money access is limited for many people. The challenges? Unstable banking system, poor infrastructure, rural villages with no network-limited digital literacy. In big cities, some digital payments appear, but in most areas, physical cash and informal exchanges are still the main way people survive. Ethiopia is a beautiful and rapidly developing nation, but e-money adoption is still early. Only a small percentage of the population has full access to banking and smartphones. Many regions don't have stable networks. Digital money exists, but it has not yet replaced cash. Most markets, buses, rural shops still prefer physical payments. In Yemen, daily life is challenging due to conflict and economic struggle. E-money systems are limited because internet coverage is weak, banking services are disrupted, financial stability is low. People rely on physical cash because it feels more real, more controllable, and safer in uncertain times. In Haiti, the story is different but similar. Natural disasters and economic challenges slow down digital transformation. Many households cannot afford smartphones. Banks are limited, and cash remains the trusted method for everyday life. From food markets to transportation to local businesses, e-money is growing slowly, but it has not replaced traditional money. Across parts of West and Central Africa, like Niger and Chad, digital payment systems exist, but only a small population uses them. Why? Low smartphone access, high poverty levels, weak internet infrastructure, limited financial education. Most people live in rural villages where cash is the only practical option. So why is e-money adoption slow in these places? Because digital systems require strong internet, affordable smartphones, stable banking, trust in digital financial systems, education on how to use them. And in many regions, these essentials are still developing. While the world moves rapidly toward a digital future, some countries remain cash-heavy. Not because they don't want progress, but because they face challenges that slow it down. E-money will eventually reach everywhere, but the journey is different for each nation. In the end, money, whether cash or digital, is only a tool. What matters is access, security, and the power to shape a better life.